So let's start. And as usual, I have to read out the risk disclaimer before we dive in. All right, this webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instrument. Trading CFD and other leverage product carries high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit, so it is important to fully understand the risks involved before engaging in trading. Well, we will discuss market analysis and trading strategies. These are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pew Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. Right? This is the risk disclaimer. Right, so yeah, today we're going to talk about candlestick patterns, but I think most of the time I will try to explain a bit like how can we use the Fibonacci retracements to get the information that we want from the chart, and then with the help, assistance of some other technical analysis tool like the candlestick patterns, and also maybe you can add on yourself with any other indicators just to help you to have a thorough enough or detailed enough trading decisions. Right, so these are the things that we're going to cover. Pretty easy, and hopefully it will help you in your upcoming trading. Okay, and you have any doubts, you can always try with demo account. Okay, because it doesn't cost you anything, but just to prepare yourself when you just want to try out new strategies. Okay, and just a little bit sharing with you like why I will come up with this topic, or the use of Fibonacci retracement. Okay, I has been using it. Okay, I'm quite most of the time. Okay, but then recently, if you have been trading or keep an eye on the crypto market, it's often like I will ask myself, especially when I look at the trend, for example, Ethereum and also BTC. Okay, if you has been with crypto, you probably know for the past 2 to 3 weeks, it has a bullish rally. All right, but then if you look at the past few sessions, it has been a corrections or a retracement, or actually I don't know whether or not it is the start of a downtrend. Okay, so this is where the time I always pull up the Fibonacci retracement, and I want to tell myself what it is. It is a minor corrections, it is a bigger retracement, or it is the entire change of trend. Of course, you can say, with the help of the usual way of, seeing the structure, whether or not it is like from a higher low, and it turns to a lower high, lower low, and also with the help of some of the candlestick patterns that it come into your mind. Okay, but maybe with the help of the Fibonacci retracements, then it gives you another layer of confidence to tell what happens now in the market. Okay, so this is just to share with you why I come up with today's topic. Okay, before we start, a very simple idea, okay, and also a very critical, so like how are you going to make sure that you can be an above average trader, is to find out the support and resistance. And why we do so is because we want to do our risk management wisely. Okay, and to some of you here, you might not know, actually there is no an exact line for support and resistance. The line itself is just to make sure that you know where to enter and where to exit, whether or not you're making profit or you're making losses. Okay, but most of the time there is no an exact line. Okay, you're not going to be precise enough to come up with the line to tell everyone that here sure will be the support levels and here sure will be the resistance level. It often come with a zone. Okay, because it involves like millions, like tens of millions of people in the markets to participate in the markets. Of course, everyone will have their own opinions, but what we want to do is follow the majority. So when there is like a million of brain in the markets, of course, each of them will have their own opinions. So how can we come up with an exact line to say this is a support or resistance level. Of course, it will be like a zone. So you know, you don't be too harsh for yourself to follow the exact, but of course, when you draw a line, it's just for you to set your TP and support every time when you start a position. This is extremely important. All right. So before we dive into like what is Fibonacci retracement, what is the candlestick pattern, some of it, why I put this slide here, because I just want to protect you guys from, you know, just making losses in vain, okay? Because you keep tuning your TP or stop losses, okay? You can admit lose, but make sure that you have enough bullet, you have enough trading capitals for the next time, for the next opportunity. Okay, opportunity sure will happen in the future, but your money, your capital will not come the next day, okay, with a snap of finger. Okay, so yeah, support and resistance, how you going to know where is the support, where is the resistance? That is of course depends on what direction is it going to do, right? If you're holding a short position, of course, your resistance is always at the lower levels, okay, lower price levels, and your support is always at the higher levels. And how we can tell where is the support and resistance, you make sure that you find the point that it touches at least 2 to 3 times, so you can know where is the support and resistance. You don't simply draw it. How you can make sure you're doing the right thing, you can use the track record. If you are using TradingView, okay, you can always draw the support and resistance. After that, you can run some demo and trade to see you are on the right path. All right. So yeah, I don't want to go in deeper like supply and resistance. You should know even before you start trading. All right. So now let's move into the Fibonacci retracement. Okay. So this guy, okay, he is the one to come up with this. He found this sequence. Okay, the numbers, the sequence, and it turned out to be the law of nature, the law of the universe, with a very special number. And after that, from time to time, people see it, you know, everything happens is surrounding this number. Okay, so this is the number, okay, the very magical 0.618. So how he derived this number is by this. So 0 plus 1 get 1, and 1 get 1, 1 plus 1 get 2, 1 plus 2 get 3, 2 plus 3 get 5, 3 plus 5 get 8. Okay, and it goes on like this, right? So after that, they use it to divide. So 1 divided by 1, 1, 1 divided by 2, 0.5, and then 2 divided by 3, 0.66, and goes on. And what is the beauty of it is that after they come to 34 divided by 55, and then 55 divided by 89, the numbers get you know, stick with this 0.618. From here onward, you can try. Even, you know, you use 144 plus 233, and then you get a number, and then you use 233 to divide by the number, you will still getting 0.618. So this is the magical number, okay, in the world. You know, like if you are an artist, when you start drawing, and then you know, they come up with this I don't know what this is called, because I'm not like an engineer or scientist, right? So they found this, like, it's the beauty. The world is basically built on this Fibonacci sequence. Okay, and of course, when you try to put a Fibonacci retracements on any charting or any technical analysis tool, you will find other number like also 382. You know, so these are the all of these number are actually derived from the sequence here. Okay, and they do it for patterns, and then they try to find the law of the law of nature, basically, and then we try to stick with it, and then try to get, like, you know, what's the chart is, you know, what is the market is happening, basically, and try to tell what is the upcoming price actions going to be. Okay, so when you pull the Fibonacci retracement from 1 to 0, basically you are getting this number. So this for example, from 1 to 0, you're basically getting like 23.6% of a retracement, and then 38.2% of a retracement. And then why I highlighted this too is that if you are a retracement believer, okay, but of course most of the time it's true, when you look back to all this past or track record, you can see most of the time any trend definitely will follow by a technical retracement. Definitely sure will have a pullback no matter how strong the trend it is, okay, because that is human. Humans are greedy. At some point everyone will start to think, I should take profit here. And then when get more and more people think so, when they start to take profit, right, it will amplify the sentiments. And then people like us, some of the people like following the institutional player, they will try to follow us, right? Well, say, oh, already people start selling, and then the price is getting lower and lower. There is no more momentum, because people getting start selling, right? And we will follow suit, right? So when started by the institutional player, and then later on followed by the retail investor, so it will amplify, it will accelerate the selling pressure. So definitely it will at some point will trigger a technical retracement, because this is human behavior. Okay, and people find like 50% and 61.8%, it is within a range of a very healthy and effective patterns or manners where there is a technical retracement happen in the market. Okay, so and then of course followed by 78.6% and also 100%. Of course, most of the people will see if the trend break below 78.6, meaning it is gone. Okay, it's mean a total trend reversal. But if the trend is like found support on above 61.8% or on above 50%, means that it's a healthy retracement, and people in the market believe a rebound from here, it will eventually go beyond the previous high, and the previous bullish rally continues. It will be extended. So this is the whole idea behind how you use the Fibonacci retracement, whether or not it is a downtrend or an uptrend. Okay, because how you're going to do it is, okay, this picture actually depict briefly like how we use it. Like I said, whether or not it is an uptrend or a downtrend, always it will touches at one point and it trigger a technical retracement. Okay, and how you're going to use it is you pull from the starting point to the end point, the whole swing. Okay, how you do that? You pull from the bottom to the top. Okay, and for sure everyone see the bottom and the top differently. How different? If you're using the day one chart, if you're using the weekly chart, or even you use H1 chart, everyone's seeing the different thing. But I want to stress that it is really useless if you are trading with 10 minutes, 15 minutes, 5-minute chart, 30-minute chart, because within this chart, this time frame, there are a lot of noise. Okay, because in a short period of time, a lot of opinions, so you can't get like a real true trend. Okay, for Fibonacci retracement, most of the time it is more useful for a swing trader. Okay, if you are a what they call the scalper, then you might just can leave this webinars already, because Fibonacci retracement for you is really useless, because what you want is just like holding a position for like 5, 10, 15 minutes, half an hour, things like that, right? But if you are a swing trade trader, you wish to hold a trend for like a day, a week, this is something for you, because you want to double check like what is could be the upcoming trend, and you just double check with the Fibonacci retracement. Okay, so this is one of the example, okay, with the dollar index long time ago. Okay, and this is what we call like, you can tell this is like the lowest point of a trend. Okay, and this is the highest point. Of course, when in a real time trading, it already, you already like see this much of a trend. Okay, this much of the chart is already available with you, and you might have doubt over here. You might think like what happened with the latest BTC trend, for example. Okay, I might ask myself, what is happening now? It is like a very minor retracement, or it is like a big correction, or it is an entire change of trend. So I might want to pull up the Fibonacci from the bottom to the top if it is an uptrend, and when it touches here, okay, I would not do anything for me. Okay, I'm just sharing my experience with you. I would not do anything when it just touches here. But if it touches here and then I see a strong rebound, cross 50, then if I still holding my position here, I might want to add on. Okay. Or if let's say I have this principle, anything that retrace more than 5%, I will have to, close all my positions. And I was still observing, right? I'm still observing, and then when it dropped more, I think, oh yeah, because I already closed my positions, I'm doing the right things, right? Smart enough. And when it comes to here, rebound, then you might think of it yourself, whether or not should I go in again? If this is true, okay, if it's got supported on above this 61.8%, and it, later on rebound and cross above 50 and goes on, should you go in again, jump in, open another trade, and hopefully it can, the next rally will at least go beyond the previous high level. Okay, so this is the thing that you want to think when, if you are a swing trade trader, and then you already gotten all this, got all the profit here from the previous trend. So this is the second chance for you, whether or not you want to follow. Okay, so yeah, after, it could be like this. Okay, see, after it dropped and then it rebounded within this level. Remember, I say between 50 and 61 is quite critical, quite crucial, and then it rebounded and it crossed above the previous high. So it depends on you, like where you want to set your next TP. Okay, so that is also required experience. Okay, so this is a very good example, but I want to tell you that that is not that nice in the real time. Okay, not every time you can have the very nice chart and draw a very nice precise Fibonacci retracement. Okay, so it again required a lot of experience. So of course, experience doesn't like acquire when you start trading. Okay, experience can you can earn a lot of experience by doing a lot of homework, by using the track record, by using the previous chart. You can draw for fun, and you can examine it like how good you are drawing it, and then later on in the real-time market, when something similar happens, and then when you drew it, you will recall back in your mind that you can just imagine like something it happened before, very similar, and hopefully it helps. Okay, and similarly to the downtrend. Okay, downtrend, you also can draw a Fibonacci as long as you draw it from the right to from the left to the right. Okay, you don't draw it wrongly. Okay, from the right to the left. No, from the left to the right. Okay, and if you're open a short position, from the top to the bottom. Okay, if you are holding a long position from or it is an uptrend, draw it, pull from the bottom to the top. Okay, if you are looking at a bearish trend, downtrend, you draw it from the top to the bottom, and it means that at some point people will start selling TP, right? And then it will trigger a technical rebound. Okay, trust me. Okay, I promise you, any uptrend that you see will definitely followed by a retracement. Any downtrend that you see, no matter how bad it is, at some point it will trigger a rebound. That is for sure, because whether it's humans, things repeated. No matter like whether or not you are from 100 years ago or today, if you are humans, will repeat the same behavior. Okay, so this is also the example, okay, that I can find like in the past. Okay, later also I will like try to share with you the real example and then the share with you. Okay, so this is some things that happen like when it touches 50. Remember, not every time is 61.8, but sometime at 50. Okay, this is like, you know, people do it with a lot of experience. They come up with this figure, either 50 or 61.8. That is healthy. But of course, some people might argue that if you see a trend where it already start to retrace and then rebound at 38.2, it means the momentum is very, very strong. Sometimes I do agree with that because people like can't wait, just a minor retracement, and people already can't wait to jump in and then will push another rally at above 38.2. So you can explain the behavior, the pattern in this way, which it do make sense for me. Okay, then another example, yeah, where, you know, it draw like a trend and then it happened like this, so downtrend, and then it might think that you have a continuations of a downtrend here. Okay, so now let's move on. This is something that I draw. I try to find, you know, I pull back to the previous chart and then I found this. Okay, so yeah, you know, I draw. I hope that you can tell this is the trend, right? This is the very clear trend where you see here there is a lot of noise, here is a lot of noise, but here, okay, a very clear uptrend where most of the people believe that it's going up. Okay, where the trend where the noises is very limited, everyone have the same opinion. That's why we have this rally. And when it comes to here, okay, and then there's some technical retracement, right? That is like people start to doing taking profit. Okay, so what I do is I pull from the bottom, I pull from the bottom to the top. Okay, and it depends on you, like how you want to do it. For some people, they involve the whole week. Okay, and some people, they will just use the full body. But for me, I think the week is also important. It is also the opinion in the market, so I often will involve the week. Okay, the tail here, the upper tail and also the lower tail. All right, so if you look at it, you know, in the daily time frame, you can see here followed by a doji candlestick. Okay, so for some people, if you are experienced enough in the market where you have sufficient financial knowledge, you know that an appear of a doji candlestick, it means that the opinions at this time frame start to change. Okay, people already have a very mixed opinion here, and it might trigger a rebound. And where it happened, it does happen at near 61.8 Fibonacci retracement level. Okay, so if you like, you know, like previously we see this uptrend and then you draw this like price consolidation range, and then you tell yourself, if press the wrong button, and you tell yourself, if it break below, you will start to short it. If it break above, and then you will enter a long position. And then what happened? It does break above, and then you jump into a long positions, right? And then you hold a position because you are a swing trader. You hold it long enough, and up to one point, you know, it dropped by 5%. Okay, it dropped by like 5 or 10%, depends on your principle. Okay, drop by 5%, then you say, oh, I close my position here. Okay, and then you watch it to drop further until you draw this Fibonacci retracement, and then it come to here. Okay, and then you think that whether or not it is a change of trend or whether or not it is a rebound, then you see this dodgy candlestick, and then but you think yourself, yeah, where this is happens of a dodgy candlestick, this is a signal of a trend reversal. Okay, then you might want to jump in, and then of course, just like previously I told you, probably it might just drive higher and then go beyond the previous high. For this example, it is a wrong one. So I tell you, it is not going to happen like by textbook 100%. Okay, it takes time for you to gain enough experience to react on every odds in the markets, because sometimes we do encounter anomaly, sometimes we do encounter very different case study. All right, and then move on. This is also another example. Okay, another example here. You pull from the bottom to the top, and then it does nicely found a support. This is like a double top. Okay, I mean double bottom, a double bottoms, and then rebound. So yeah, and on above the 61.8. Of course, this is one of the another false signals where it didn't really strong enough to rebound until the previous high level here. Okay, so for these two case study, I also want to share with you, maybe sometime in the market, the faster it does rebound, the stronger the trend it is. Okay, if it wait until 61.8 only rebound, this means the momentum is like really easing. People start to have a different opinion in the market, and then people are fighting in the markets. So it will trigger a very different or very very indirect trend ahead. Then this is sometime that where I will stop. Okay, so just to share with you. All right, and another two example here. This is like a 50%. Okay, here is 50%, and then here this is also very nice. The latest one, the latest goal. Okay, it like found support on above 38.2%. This is the daily time frame. Okay, you pull from the bottom to the top. Okay, and then you find this. Okay, from the bottom. Okay, I draw it again for you. From the bottom to the top, and you put it here, and then you can see it does found support on above 38.2. So if you want to believe it or not, maybe after the triple bottom here on above 38.2 means that the whole buying pressure, the whole momentum here is still intact with the goal, and hopefully one day we can witness the goal to eventually break above from the resistance here. Okay, because you can tell here is a very strong resistance, right? It has been capped the goal since April, like 4 times already. Hopefully the 5th time it can break above and then create another new all-time high. Okay, so yeah, so this is some of the example, and then maybe you guys can also have a look at BTC. Where did I draw? Okay, so yeah, the latest one, this is also where I share it. Why I come to this is the latest one. I draw from the bottom to the top. Okay, the top is here. Okay, and it's a double top here. Okay, I hope that you can see. This is a double top here, right? So I will be like already asked a question here whether or not it will be strong enough and then to find a strong support on above 38.2, but it didn't happen and then continue to drop. So I really like waiting over here, see whether or not it will find a strong support here and it gain back to above the 0.5 here, 111 and 111K. So if this happen like this, I will give it a try. I will hope that the next rally will go from here to here like this. At least, triple top. So this is my plan when I look at this. I'm just sharing with you. And at this point, it is still, still effective, where because this the entire previous uptrend is still not breaking below the 61.8 Fibonacci retracement. If it does, then I have to have another question, how far it will drop. Okay, that is the next question if it happened. But at the moment, this is something that I already tell myself at what scenario, like what I'm going to react. If it does like, sideways here and then break above, stood firm on above 1118, 111K. Okay, you can see the price here, 1118, 111K. I will try to open the long positions, and my first TP will go to the previous high here, where it formed a triple top. at near to 1 to 3K. So this is my trading ideas that I share with you. Not 100% that I'm going to be right. Not 100% I'm telling you that I'm sure I'm going to make a lot of profit. But I'm just sharing with you by how I use the Fibonacci retracement and how I trade accordingly with BTC with the latest trend. Okay. Now, moving up next, we'll go with candlestick. Some of the very easy, simple candlestick that I want to share with you. And sometimes when if confluence with the Fibonacci retracement, and also if it does happen, you found it on the support and resistance levels, then it like give you a double confirmations of the current situation in the market, and then allows you to make a more precise trading decision. Okay, so we will start with like hammer, hangman, bullish and bearish engulfing, and morning star and evening star. Hopefully it will be enough for you to double check with your trading decisions. All right, so I hope that everyone already know what is the candlestick and what it consists. It consists four very important information on every single candlestick. Okay, it shows you the highest price at the time frame, lowest price at the time frame, and opening and closing price. Okay, of course the body is also very important. A full body means, okay, it depends if it's like a bullish candlestick. A full body means that at this time the opinion is very strong, everyone believe in the one direction. A tiny body means that the opinion is mixed. Okay, people change their opinions a lot, and it pushes the body. Okay, and of course the tail is the highest and lowest price. Okay, and just to tell us during that particular time frame, what are the highest price and what are the lowest price, and what is the highest price and what is the lowest price. Okay, and what is the hammer and hangman? You can see something like this. Okay, a very tiny body with a very long tail. Okay, a tiny body with a long tail, and a hammer and a hanging man, it depends on where it happens. If this is like a long downtrend and suddenly you see this hammer candlestick here, it means that it does push the price to the lowest level. Okay, I try to explain to you what does this single candlestick tell us. Okay, it does send the price to the lowest level here, but eventually people think that at this particular time frame, this asset shouldn't deserve this low price, and different opinion come in, start to buy and push the price much higher. If it does, people agree with the opinions of a bearish trend, the price should close lower at here, right? But why the price push up to here? It means that a different opinions coming in and push the price higher, which is led the candlestick to close at here. So it happened with a tiny body with a long tail. Okay, so this tail here means very different opinion, and followed by another two bullish candlesticks. For this combination, we can almost to tell here come the trend reversal, right? Similarly, here also, so maybe the price used to like drop to here, but then it closes up here. So we also can tell this is not a full body. It might have a different opinion. But what is different from here is that the different opinion, but it still allow it to close higher. But it could be sometime a hanging man and then the trend continue to goes up. Then we got it wrong. But if you have a hanging man and followed by bearish candlestick after the hanging man, it's been the change of an opinion, right? And then it is the signal of a trend reversal. Okay, hope that I can explain the trend correctly. And then next time if you see the similar thing, so this is something that I captured with a real-time markets. So a downtrend, and then with the hanging hammer, and then an uptrend here, right? And then also another. Okay, you can see sometimes it is not that nice, everything goes by textbook, but sometimes a lot of noise, and then you might think twice, like what happened next? Another dodgy candlestick, whether or not it's a change of opinion again. It could be possible. Sometimes it will just continue to go down. But if you stay long enough in the markets, and if what is the beautiful of it is that, what if it does, you did draw a support level here, okay? If you draw a support level here after a downtrend, and then you see a hammer candlestick here, and then you already plan to catch a rebound here, and happens to be your support levels, and here come the hammer candlestick, it just gives you another layer of confidence that quite sure here is the trend reversals, and then you want to open a long position here. Okay, next one, engulfing. Okay, so like what happened early, like this is downtrend, and here come a different opinion. Okay, the previous one is different opinion within one candlestick, but this one requires two candlesticks. Okay, so what we mean by engulfing is that we want to have a candlestick that go bigger. Okay, this time we compare the two body of the candlestick. The body have to be bigger than the previous body, so it engulfs the previous candlestick here. Okay, this is the bearish, this is the bullish, and then we can tell for sure that is the different opinion here in the market, that it engulfs the previous opinion here. It means the signal of a trend reversal. Similarly here, after an uptrend goes all the way up, and then suddenly the body is getting smaller, and the next candlestick, the full body of a bearish candlestick, engulfs the previous candlestick here, it means a different opinions kicks in. Okay, and from here, this is a trend reversal signal of a downtrend coming up next. If you has been holding a position, you might want to TP here, or if you haven't have a positions, then you can start a position over here. Okay? So this is the usage of us watching a different trend reversal signal. Okay, so here comes the real life example. Okay, a full body engulfing. Okay, this is the bearish engulfing, a very tiny body followed by a huge body. So uptrend, downtrend. Okay, so downtrend, reversal, uptrend. All right, the last one is the morning star. Morning star requires 3 candlesticks. Okay, remember hammer requires only 1 candlestick, and then the engulfing requires 2 candlesticks. Morning star and evening star requires 3 candlesticks. So meaning to say, the more candlestick, it will give you a more precise signal. Okay, because it uses 3 time frame to come up with an opinion, to come up with a decision. All right. So what is a morning star and what is the evening star? If you can see the pattern, okay, is very similar. What is the difference is that where it happened. It happened at the bottom of the trend, or where it happened at the top of the trend. Okay, if it's at the bottom of the trend, it means why it called morning star? Because we're expecting the bearish trend ending here after you see a morning star, because morning give us hope, right? Give us brand new hope in the morning where the sun rise, and then we hope that later on it will have following up, come followed by an uptrend here, because it's the previous downtrend is ended after we see this morning star. And evening star means sunset is coming, no longer uptrend. Okay, after they see this evening star, it means following by a downtrend. Okay, night is coming, going down. So this is the name why it called evening star. So how we see a morning star, evening star? We have a very long full body of a candlestick, followed by a doji candlestick. Whether or not it is a bullish one or the bearish one, it has to be a doji candlestick. And then the next candlestick has to be a full body of a bullish candlestick, and for the evening star, a bearish candlestick. Okay, if it happens like this, 3 come together, it is a morning star and an evening star. Okay, so this is the real life example. Okay, it has to be a doji candlestick, whether or not it is the bearish or the bullish, but it has to be. But of course, sometimes it is not like by textbook. Okay, a full big body. Of course, if it has, then this is the best. If it's not, then it gives us a more confusing signal. Okay, And then here is a more like by textbook example. Full body of a bullish candlestick, dodgy, and then full body of a bearish candlestick, and then go downtrend. Okay, so this is the very nice evening star case study over here. Okay, so again, a hangman and or the hammer is by just one candlestick, and then the engulfing we using two candlestick to make sure for a trend reversal signal, and then the morning star and evening star use three candlestick to tell us whether or not it is a trend reversals or what. Okay, right. Then before I end today's session, also I want to update you guys on some of the economic calendars, because I believe whether or not like how good you are using a technical technical analysis, we cannot fight against the fundamental. Okay, if today you have been trading with dollars and then the trend is very, very nice, but this Friday we know the USPC is coming. Okay, the USPC is one of the very, very important inflation data for the US, because the Federal Reserve use it to make decisions for the upcoming monetary policies, right? So you be my guest, if the USPC comes very strong, very high, that's showing sign of a rebound in the inflation in the country, then definitely will just boost the dollar, no matter currently how bearish it is. But what if it's the USPC come very, very low, then it definitely going to hammer the dollar down. Why? Because last Friday, Jerome Powell already gave a very dovish statement. Okay, last Friday. Okay, so I just want to remind you, if you have been trading with the major pairing, so any pairing, any forex pairing that involve US dollar, and please be cautious, please be aware of this Friday USPCE, because we really don't know, unless you like sleep at under Jerome Powell bed, then you might know the data earlier than the rest of the people. But if you don't know, then I will advise you hold on only trade after the USPC was released. Okay, and then moving on, next week we also have some of the very important economic data, and euro is kind of have like a bit of lacking of direction, so we really have to wait until next week. Okay, next Tuesday, where the Eurozone CPI is coming up, but I bet that it will just come very stable at near to 2%. Then probably it will be just priced in by the markets, and then nothing's really big going to happen to the euro, unless the US dollar is weak, unless the Japanese yen become weaker or stronger, then it will fluctuates the euro. But if it's not, maybe during these few sessions you guys can avoid euro, because if the currency become very, very sideways, very flat, most of the time we will incur losses. We want something that is very fluctuate. That is where the opportunity come, when we can capture the trend and then we can make money. Okay, and then coming up next, also we have the UK. So UK recently people perceive it as quite weak, okay, in terms of their economic performance. So we really want to see their retail sales reading next Friday. And then of course we really wish for something special to happen in the market, or else we'll left something, we'll left nothing to trade. But of course, bear with me, next week the dollar will be more interesting. Okay, I already anticipate a more fluctuated dollars next week, because we'll be fueled by a lot of US job data, including the ADP non-farm unemployment change, including the initial jobless claim, including the non-farm payroll, and also the unemployment rate on Friday. So the next week, I think we'll start from Monday to Friday. We are expecting a more swing in terms of the US dollar, because there is a lot of job data. All right, so please note down. Okay, it will be very important. If you want, you avoid it. Okay, if you want to trade through because you're holding the position for longer, swing trade, then you have to be extra careful. Okay, right. So here come to the end of today webinar. So I will be starting to get some of your Q&A. If you have question, then you can type in, right? So Daniel asked, if the news is bad but the overall trend is bullish, can you use? Yeah. this is also, I think I already said in the just early, where any technical analysis tools, right? It derive from the past volume and the past price actions, which is it is a history. But then we assumes that history will repeat itself. But not this is not always true in the market. Like I said, if there is a news, there's a big news. Okay, let's say the gold start to retrace, okay, start to have a downtrend, and then suddenly we have a very severe fight between Russia and Ukraine, or we have like a cross bombing between Israel and Gaza, for example. Then of course the gold will definitely spike up. So no matter how thorough technical analysis you did, it's going to be useless after that. So and also, but the Fibonacci retracement is drawn by using the past price, right? Remember, I told you from the top to the bottom or from the bottom to the top. So it just tells us where you think will be the support line, okay? Where you know you might think that at 61.8% will be the support line, where at the 50% will be the support line, okay? So you can use it to be your support and resistance line, okay? So yeah, but news beat and anything. Okay. News trigger often very choppy markets for the time of the announcement. I think best is to avoid 30 minutes. Yeah, this is a very, very wise move from Ina. For me, if you really want to trade on news, I'll often also you will just use like 10 minute to 15 minute chart. And then I will also will wait for the market to digest the news and also the reading. Only I will come in to trade. And then yeah, so anyone here, if you wish to have the recording, you can request it from your respective account manager or CS. Then I will try to send the recording to you guys. Okay. Ina asks, I mean, is Fibonacci better or EMAS? So what do you mean by EMAS? Tudo say I see you use 1 year chart. I'm using the day one chart because like I said, it is more useful if you are using like H1 to H4 to D1 chart because it avoid a lot of noise. So if you use like 5 minute chart, 10 minute chart, 15 minute chart, I think it's quite useless if you are using it to trade with, if you are a swing trade trader. Okay, you shouldn't use minute charting. Okay, so if you are a scalper, then it is okay, go for it. But if you want to hold a trend for longer, it would be wiser if you use H4 or H1. All right. Right. So does the time? Yeah. Robbie asked, does the time frame matters for candlestick pattern? Of course it does. Of course the bigger time frame, the more effective will it be? Okay, like I say, like 1 minute, 5 minute chart, a lot of noise in the markets means that it it has a limited time for you to collect enough opinions. Okay, every single candlestick it gives us an opinions, right? We try to tell what most of the people think in the markets, and then we try to follow suit. So if you just watch at like 5 minute, 10 minute charts, then a lot of noise in the market, a lot of different opinions, then it might sometimes give you a wrong information. So if you really want to tell what really happens in the markets, it would be at least wise to use H1. If you don't want to hold your position for too long, and if you don't want to be confused by too many noise, then I would say just H1. You can try H1 first. Yeah. So right. So then I think it's about time. Once again, thank you guys for supporting us, and then hopefully you have a very enjoyable time trading on and trading with Pew Prime, and hope to see you guys in the next one. Thank you. Thank you, everyone. Thank you. Bye bye.